Hello and welcome to another Friday market update. So let's talk about what's going on with mortgage rates. And they moved higher today. More importantly, how can we turn these challenges into opportunities in today's market? So let's dive in. First, let's start with a big headline. Mortgage rates climbed again this week to 7.24%, according to Mortgage News Daily. So you might be wondering, what's behind the rise? I mean, it comes down to really two things. We've talked about it a lot: jobs and inflation. So this morning, the Bureau of Labor Statistics dropped our bombshell jobs report, the BLS report, and Wall Street was expecting 160,000 new jobs, but the actual number, 256,000 new jobs. And if that wasn't enough, the household survey, a lesser known metric of the BLS report, showed 478,000 job gains, with the unemployment rate dipping to 4.1%. So now most of these jobs were created by folks under 24 years old, so not the prime working age group, which does offer some consolation, but it was still a very strong report. So Wall Street didn't hesitate. Rates jumped. Why? Because more jobs mean more spending. More spending can lead to, you guessed it, inflation. So now let's talk about the so-called Trump effect. One thing we know about Trump is that he is shaking things up in Washington. Love him or hate him, he is disrupting the status quo. Now, change is hard. Nobody likes change. Nobody likes turbulence. And the markets, they definitely don't like uncertainty. So while optimism is building around his economic policies, it's still too early to tell whether this momentum will lead to long-term growth or if it's a temporary boost. We'll need months of data, unfortunately, to see a clear trend. And until then, we need to expect that rates are going to stay elevated as Wall Street plays it safe. They never want to be on the wrong side. So is there good news for the buyers and or sellers? So where's the silver lining, Bill? So there's actually some good news here. So especially in my opinion for buyers, because of the rise in the interest rates, there's going to be fewer buyers, meaning less competition for them when they go to seek a house. So home price increases, number two, are leveling off. They're not increasing as much. You're seeing a lot more sellers starting to get a little bit more realistic on the sale price. So I do believe values are going to continue to go up, but at a much slower pace. Now, builders, we know, are ahead of the game. They are offering incentives to lower interest rates, focusing on monthly affordability rather than the actual sticker price. And I work with buyers every single day, and they are looking at mortgage payment. It's like, oh, that mortgage payment's too high, I can't afford it. So, and the sellers, if they want to compete with builders and or other sellers, they should also consider getting creative too. So a smart strategy for sellers, here's a tip for sellers. So instead of lowering the price, offer concessions like a 2-1 buy down or a regular buy down. I'm going to break it down for you on a 2-1 buy down. On a $500,000 home with 5% down, dropping the price by $20,000 might save the buyer about $100 a month. And the buyer, that's not a lot for a big house like that. But a 2-1 buy down, that'll save them about $500 a month in year one, $250 a year, or $250 a month in year two, and it only costs the seller around $12,000 instead of lowering the price by $20,000. So it saves them too. So this way, the buyer gets a more affordable payment in the beginning, and the seller doesn't have to slash their asking price. It can be a win-win for both. So if you're heading to a listing appointment, let me know. I can provide the documentation or even jump on a Zoom call with you to explain it. So here's the bottom line. Creativity in this market is going to be key. So let's work together, find solutions that help both the buyers and sellers. So if you got a buyer ready to jump in, send them my way. I'll walk them through a free CIA analysis, credit income asset, and make sure they're fully prepared. And if you're strategizing with sellers, I'm here to help you show them the power of the buy downs and concessions for the buyers. So let's connect, make the most of the opportunities in today's market. And that's it for this week's market update. As always, have a great weekend, and we'll see you next week on the market update. Take care. Gaylord out.